distribution of reserves and accumulated profit or losses among the partners. Whenever there is reconstruction of partnership firm, which may be on account of admission of a new partner, retirement of an existing partner, or change in profit sharing ratio, whatever profit the firm have earned, whatever amount the firm has kept in form of reserve out of profit aside. So all this profit, all this reserve will be distributed among the old partner in their old profit sharing ratio. For example, A and B are doing business since last 5 years. They have earned profit of 2 lakh. So whenever they will admit C as a new partner, they are not going to share the past profit with the new partner. The incoming partner will be entitled only to the future profit. So before giving admission to a new partner, the old partner will distribute all the profit, all the reserve among themselves. So entry in this regard will be profit and loss account debited, general reserve account debited, capital reserve account debited, reserve fund account debited, contingency reserve account debited, workers accident compensation fund account debited, investment fluctuation fund account debited to all partners capital or current account in the old profit sharing ratio. All these are having credit balance. All the reserve will have credit balance. Here profit and loss account means profit which will be having credit balance. So to close this, we will debit them and we will distribute them to the old partner in their old profit sharing ratio. If there is loss or some fictitious assets are given, like profit and loss account debit balance, which is loss, advertisement campaign account, research and development account, any other non-return of revenue expenditure, or you can say fictitious asset deferred revenue expenditure, which are shown on the asset side of balance sheet. So they are having debit balance, so it will be closed down. They will be credited and will be distributed among all partners in their old profit sharing ratio. So entry will be all partners capital account debited to profit and loss account, to advertisement campaign account, to research and development account, or to any other non-return of revenue expenditure account in their old profit sharing ratio. See. Illustration 10. Ram and Rahim are partners of a partnership firm. Profit loss sharing ratio between them is 4:3. The following are the balances in the books of the firm as on 31st March 2017. Profit and loss account debit balance 14,000, reserve fund 42,000, workers profit sharing fund 21,000 and workers accident compensation fund 26,000. On the above date, Ram and Rahim decided on a new profit sharing ratio of 1:1. A claim of 5,000 is outstanding against the workers accident compensation fund. Past journal entry showing distribution of accumulated profit or losses in the books of the firm. Now, out of this, workers profit sharing fund is neither profit nor loss, nor it is reserve. It is just given for creating confusion. Workers profit sharing fund is basically liability. So liability will not be distributed, it will be outright paid. So you don't have to do anything with workers profit sharing fund. Now, out of workers compensation fund, they have specific instruction that a claim of 5,000 has to be given. So workers accident compensation fund is basically created to compensate workers if they have met with any accident. So out of the balance of workers compensation fund, first of all you have to subtract the amount of claim, and the remaining amount of 21,000 will be distributed amongst partners. First of all, we will distribute profit and loss account debit balance amongst partners. Since it is lost, it will be having debit balance. So to close it, we will credit it. And what we will debit? We will debit partners capital account. So entry will be Ram's capital account debited, Rahim's capital account debited, to profit and loss account. This 14,000 will be distributed amongst the old partner in the old profit sharing ratio. Old profit sharing ratio is 4:3. So it will be distributed in these ratio. So 14,000 into 4 divided by 7. So 8,000 and 6,000. Next. Reserve fund. It is reserve. So we'll be having credit balance. And workers accident compensation fund. It is also fund reserve having credit balance. So to close them, we will debit and we will credit partners capital account. Reserve fund account debited. Workers accident compensation fund account debit. Here amount is 42,000 and out of 26,000 balance of workman compensation, the amount of claim will be subtracted. So 21,000 will be distributed amongst all partners in their all profit sharing ratio. Okay. 6,000 and 27,000. Instead of passing combined entry, you can also pass separate entry. Okay, first reserve fund account debited to Ram's capital account to Rahim's capital account, and next workers accident compensation fund account debited to Ram's capital account to Rahim's capital. Basically, these type of sums are most likely to be asked. Sure. Illustration 12. Pushpa, Pratibha and Bhavana are partners of a partnership firm. Profit and loss sharing ratio 3:2:1. Balance sheet of partnership firm is given. Okay. Then, as on the above balance sheet date, partners have decided to change profit and loss sharing ratio to 1:1:1. So it is reconstruction. And have decided to revalue the assets and liabilities of the business. Following revaluation account is prepared for the revaluation of business. So they already prepared revaluation account. So on the basis of revaluation account, you have to pass journal entries. Very easy. So instead of preparing revaluation account, you have to just pass journal entry. So on the debit side, machinery account, furniture account, investment account, bad debt reserve account, stock account, outstanding expense account. So instead of passing individual entry, we can pass combined entry. So first entry on the basis of item given on the debit side of revaluation account. Entry will be revaluation account debited to all of this: machinery account, furniture account, investment, bad debt reserve, stock and outstanding expense. So revaluation account debited to machinery account. To furniture account. To investment account. To bad debt reserve account. To stock account. To outstanding expense account. 60,000, 5,000, 3,000, 7,500, 2,500, 8,000. Total of this 86,000 will be debited to revaluation account. Now from the credit side item. So entry will be land and building account debited, creditors account debited, income receivable account debited to revaluation account. $40,000, 6,000 and 4,000. Now, entry for the loss. Partners capital account debited to revaluation account. Pushpa's capital account debited. Pratibha's capital account debited. Bhavana's capital account debited to revaluation account. 36,000 loss which will be distributed in their old profit and loss sharing ratio, which is 3:2:1. So 18,000, 12,000 and 6,000, which is already given. Let's solve MCQ. First, at the time of reconstruction of partnership firm, blank is prepared. Both. Which account is prepared? Trading account, evaluation, realization, P&L approve. B. Answer is B. Revaluation account. What are the effects given when the value of assets increase at the time of reconstruction of a partnership firm? So whenever there is increase in value of asset, it will be added to asset and will be credited to revaluation account. So answer is A. Addition in asset value and revaluation account will be credited. Then third, where are the effects given when the values of liabilities decrease at the time of reconstruction? So whenever there is decrease in value of liability, it will be subtracted from liability and same will be credited to revaluation account. Entry will be liabilities account debited to revaluation. So answer is A. Third answer A. Revaluation account is also known as C. Profit and loss adjustment account. In which ratio profit or loss of revaluation account is distributed between the partners? D. Old profit and loss sharing ratio. Where is the accumulated profit as per balance sheet is shown at the time of reconstruction of partnership firm? Accumulated profit will be distributed among all partners in their old profit sharing ratio. So they will be credited. So answer is C. Credit side of partners capital account. Because entry is accumulated profit account debited to partners capital account. In the reconstruction of partnership firm, sacrifice ratio is equal to old ratio minus new ratio. S is equal to O minus N. Answer is C. Then in the reconstruction of partnership firm, gain ratio, new minus old. Answer is A. At the time of reconstruction of partnership firm, investment are shown at blank value in the balance sheet after revaluation. Market value. C. Market value. Where is the workers' profit sharing fund shown in the balance sheet at the time of reconstruction of partnership firm? Liability side, because it is liability. So answer is B. Liability of balance sheet after reconstruction.